So is it possible to get into real estate investing and buy some investment properties without using the bank? Maybe you have some credit challenges or you've recently been denied of a loan to buy a rental property and you know it's a profitable deal. So in this video, I'm going to go and show you guys a concept that will allow you to buy investment properties, rentals, fix and flips without using bank financing or even having the bank involved. So what's going on, guys? My name is Sam Kwok, one half the Kwok Brothers, and welcome back to the channel. For those that are not familiar with this channel, this profile, we regularly talk about real estate investing concepts, strategies, tactics, you name it. We have free courses and free resources. So stick around to the end. We'll give you guys those information towards the end of the video. So the concept of buying investment properties, rental properties without using a bank, yes, it is possible. It is not some midnight commercial or some gurus trying to sell you courses. It is a possible concept, although there are some myths as well as some false information out there about this. Now, one particular way of getting into an investment property, whether you want to buy a rental property or you want to do a fix and flip, is a concept known as seller financing. Now, seller financing really kind of fits underneath this category of creative financing, and we'll get into a more thorough guide in another video. But let me tell you exactly what seller financing is and how you can use it to buy investment properties without using the bank or a bank loan. So let's go and get started. So I'm going to share my whiteboard with you guys and give you a basic rundown on what this seller financing concept even is. So traditionally what you would do is, let's say you go, you're the buyer or the prospective buyer, and you identify a property and you know that this property is going to be very profitable. And let's just say this is a rental property. And so you meet up with the sellers and you strike up a deal and say, hey, I'm going to buy this property for $100,000. And again, you know that you've done the analysis. We have a whole separate video just on analyzing and calculating the cash flow. So definitely check out those videos. But let's say you find a deal. Unlike going to the traditional route, which would mean, let me just change the color. There we go. Traditionally, you would go to a bank. Let me draw my bank here. There we go. All right. You go to bank and apply for a mortgage or an investment property mortgage. There are special mortgages or separate underwriting guidelines for investment properties. But let's say you go apply for a mortgage at a bank. Traditionally, they'll look at your FICO score, your debt to income ratio, what your job history looks like. They're going to look at pretty much all your finances to see if you are qualified for a mortgage or loan, in this case, to go buy this investment property. Now, obviously, credit is a factor. If you don't have a certain credit score, you're going to be denied. Also, you might be self-employed, or you may not have a long enough job history to go and prove that you have verifiable income, which affects your debt to income ratio, which is a factor that the bank will consider when approving you a loan. So let's just say that's not the route you're going to go. Instead of going to get a loan from the bank, which may take 30 to 60 days to get approved and go through the closing process, instead, you're going to go and negotiate with the seller directly without involving the bank. And basically, what you're going to do is you're going to go and make a periodic monthly payments to the seller. Okay, so the seller will agree to this and say, "Yeah, I like this idea. Let's run with it." So, in a seller financing concept, you as the buyer will pay the seller monthly payments. In exchange, the seller gives you ownership right of the property. Okay, so in essence, the seller becomes the bank. Now, in that monthly payment, you're making in that payment, it's typically principal. Okay, you got interest you're paying as well, which implies what? There's going to be a set interest rate that you're going to negotiate with the seller, right? In some cases, you might also end up paying taxes, the real estate taxes that the seller is going to pay, which we'll get into that in our more in-depth guide on seller financing. And then also in other cases, you may also end up paying the insurance for this property as well. I've seen scenarios where buyers, you essentially would pay the property taxes and the insurance, the homeowner insurance, and you just pay the principal and interest. In some other scenarios, I see buyers, including myself, I've done this where I would pay principal, interest, taxes, and insurance to the seller. The seller would then escrow the taxes and insurance, which just means that the seller will collect the property taxes and insurance payments from you on a monthly installments, set it aside on a separate account or document it separately so that the seller can pay the insurance as well as the property taxes to the county. So in this case, basically the seller is getting periodic payments. They're earning interest. Right now, it could be anywhere between 4 to 7% interest. Really depends on, obviously, what you and the seller will agree upon based on what is favorable for both of you. So let's say in this scenario, we're going to do no money down, which does happen on a seller financing arrangement. So the entire $100,000, basically the seller is lending you $100,000 to basically buy their property. Okay, so everything will be written and documented on a contract that you and the seller will sign at the time of you basically buying the property. So the contract is going to stipulate what the monthly payments are going to be, what the interest rate is going to be, what the borrowed amount is. So if it's no money down, $100,000, it's going to stipulate for how long, right? So it could be a 10-year contract to all the way to a 30-year contract. It could be even shorter than that, right? Honestly, it could be anything between, right? Between 10 to 30. It could be a 17-year contract, a 19-year contract, 20-year contract. Does not matter. So obviously, there's going to be some math being involved as far as, well, if it's a 30-year repayment on a 5% interest, and then you got 30-year payment, 5% interest, $100,000 loan. Do the math on a 30-year amortization. What did the payment end up being? That's what it is. Okay. So this way, there is no credit check involved with the seller. I've yet to meet a seller that ran my credit. There's no underwriting process. There's no income verification. They're not going to check your tax returns. Some might, but in most of my seller financing acquisitions I've done, I've yet to have a single seller ask me for my tax returns, right? So there's none of that. In fact, this is all based on negotiations between you and the seller. It's a private arrangement, private contract. Therefore, it does not appear on your credit report, which is awesome. So if you're in a situation like I was back when I first started, I didn't have a credit history. I didn't have a job. I was self-employed. So, obviously my tax return looked like I was losing money every year. So I could not qualify for a mortgage or a loan to get started. Plus, hard money lending, which is another alternative form of financing, was very expensive, and I didn't want to pursue that route. But when I discovered and found out about this concept of seller financing, it clicked for me, and my brother and I were able to go and acquire almost $4 to $5 million worth of real estate using seller financing. So I hope this concept kind of give you some aha moments as far as, is this possible? Is this legal? Yes, 100% this is legal. Obviously work with an attorney as well as a competent real estate professionals to help you put all this together. Again, we have a more in-depth guide if you want to learn more about owner financing / seller financing. We have plenty more videos here on our channel, or if you found us on Facebook, we have a Facebook page full of videos that you can check out for some free education on real estate investing. So with that being said, friends, I hope this video helped with you being able to understand what seller financing is, a new concept that will allow you to get into real estate investing, buy investment properties without having to use the bank. So hope this was helpful. If you loved it, like it, subscribe it, whatever you can do to support us. And that being said, we'll see you in the next video. Take care.